following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Wednesday morning in the USA. I always got to remember where I'm at and what time it is. We've got Juan on the phone this morning. Juan, are you there? Hello?
Hello.
Hey, how are you today, my friend?
Good. How are you?
Good. I wanted to get right into it with you. Not just farting around here with the normal, products that we go through, the usual suspects, if you will, because we've got so many things going on. And I wanted to bring on, somebody who's in the middle of it, got prop traders, got real money on the line, and we can just kind of walk through some of the issues. We've been talking about this all morning before the show, that may be helpful to folks out there. I thought, nobody would be better to talk to than Juan Villegas out of Colombia, South America. How are you today?
I like your setup there in the U.S.
Yeah,
I love the looks nice.
Nice to be back. Comfortable setting, not an office setting here where I'm at right now, but had enough of that in Asia for a while. Got a lot of phone calls in the middle of the night. I was actually sitting at my desk from I think 2 a.m. to 5 a.m. And the guys in Asia, the friends that I have in Hong Kong are trying to figure out what's going on. They're using the scanner. They're trying to figure out how to stay out of trouble. You and I were talking about Asia this morning, and I just would love to continue that conversation for the folks out there in Radio Land.
Yeah, absolutely. Yeah, it's been crazy. It's been a bloodbath in of course, China. The Nikkei is coming down very hard. It was kind of predicted if you've been following those markets. They've been very extended. For instance, the Nikkei has been on a rally for months, and now it's time for the market to catch up and take some profits, or maybe it's a short season all over there. It was very the rally in the Shenzhen and in China was so dramatic, and when you saw those big wide range bars in the weekly and monthly, and in China we were just telling our followers, okay, be careful, or try to find a way to short those markets, because it's pretty extended. It's a rally that it's another bubble, I guess, and it's bursting.
Yeah, I mean, the fact of the matter is, a couple of guys I was speaking to this morning, and my sleep's all screwed up right now, so it wasn't like I was, going out on a limb to wake up at 2 a.m. to start speaking to guys in Asia. The guys that I talk to, Juan, and you know exactly what I'm talking about, they're sell-side brokers on large desks, and their job, if you will, is, they're trying to either get large customers to buy things, or they're selling ideas. And again, this might not be the true definition of a sell-side broker, but they're floating ideas to larger funds, larger portfolio managers who really are money raisers. They're not really traders. They're looking to these sell-side brokers a lot of times to get ideas and to place orders. And obviously, what's in it for the sell-side broker? There's kind of an honor system there. They'll usually, trade higher commissions for information and payouts and things like that. And that business model is kind of going away. I mean, that from the regulatory side and the compliance side and everything else, it's, what's the deal there? Is that something that people who are in the fund should be subjected to? Who knows? But that's kind of the way they operate. And they were, really like telling me that, we're just sitting on the sidelines right now. We've gotten a lot of people out of what is going on, and we're just waiting. So, you and I talked this morning, and I'd like to expound on this about, where's the Hang Seng and the Shanghai really come back from? Yesterday on Tom's show, I spoke about, I think we're still up 50% from November of last year on the Shanghai, even with this pullback. The Hang Seng literally just eclipsed only the March lows on this pullback. So, what are your thoughts about what's really going on here? And is it more mechanical and more of a kind of a blip on the screen kind of issue, or is there a deeper problem here as far as fundamentals go?
Well, my style. What I do is basically I use the tools, the task tools, and we create over there some algorithms that predict when the market is changing directions. And
right.
And the way I see it is bursting this stock mania that happened on Shenzhen. So
right.
It's kind of a bubble exploding. That's what I see, and basically because of the formations. If we can see charts later on, it's all over there. So.
Right.
From a quantitative perspective, is a bursting of a bubble. The fundamentals, of course, you can find 100 reasons for this to happen, and
right.
Many people are more expert on that field than me. But from a technical and quantitative perspective, this is just another bubble bursting in the markets, and it's going to get contagious, maybe throughout the region, and maybe with what happened in Greece and what's on the extended rally in the U.S. is probably profit-taking seasons, and if you want to wait until the pullback, because the U.S. I don't think the rally in the U.S. has just ended. Maybe it's a pullback. We're in that phase, but Nikkei was pretty extended. If you look at the monthly on Nikkei, that was just screaming short. So that's kind of my 2 cents in what's happening right now overnight in Asia.
Well, let's talk about something that might be possibly useful for everybody out there. Those are awesome words, and I'm with you 100%. I mean, a lot of this is, over exuberance, whatever they used to use the Greenspan term. But we always talked about, you and I pretty much almost exclusively trade technicals, and I think a lot of guys out there, that's a pretty good way to go. Trading fundamentals, it's
It's pretty hard.
You could be very right and be 6 months off on where the entry really should be on trading fundamentals sometimes, and that can be relatively painful as an investor sometimes, or a trader. But we talked about on this show, 4,200 was probably Custer's last stance on the Shanghai to try buying some dips. Obviously, put the stops in, and then we talked about really not being able to kind of get your toe back in the water on the long side on the Shanghai unless we had gotten some closes back above 4,200, and that just never happened. So therefore, kind of sitting on the sidelines is not a bad thing. I haven't
not
been
a bad thing at all.
Yeah, I haven't been a big fan of shorting these instruments because they're if you've taken some attitude about shorting the Shanghai back at 3,000, 4,000, even 5,000, you got your face ripped off. So you just have to wait for some technical reasons to do all these things. And what I want to do for the audience out here is, what kind of attitude and stance should someone take if they're looking at I've got the Shanghai up right now on the daily. What kind of attitude from a, buy, sell, or hold standpoint should someone look at these indices right now, the Shanghai in particular? Is it time to, okay, the government intervention is happening. It seemingly didn't work the first day or two they tried it. But, is this something that the Chinese government's just going to rig it to the point where they're going to save the day? And just like...
They're going to close the market. One of these days they're going to close the market and say, there's no more trading here. What type of regime
right.
they have there. So maybe one of these days they're going to say, okay, we're going to close this for the next month or the next week or something like that to control all the mania that is happening all over China right now. So you never know with these people and with the control they have all over the economy, they might do something crazy. That's my concern.
Right, and that means that it's probably not worth it to try to take on some risk, I guess, and just trying to even nibble a little bit on the long side. But uh, the situation in Asia, I mean, I'm over there. I mean, it's kind of the go-go days over there still. I mean, they obviously, bubbles are bubbles, like you said, but when they're not sophisticated investors. I mean, and they're not sophisticated traders. I watch CCTV all the time. It's a China. Now, I mean, when I'm in Shanghai or Beijing, it's just amazing to watch TV over there, especially in the financial shows, because it's almost, it's not even 10 years ago. It's like 15 to 20 years ago what they're talking about as far as technical analysis. A lot of times, a lot of people trade price over there only. It's not there. There's just not a lot of it's not a lot of shows like TFNN offers to even offer some people out of some problems that they may be incurring. But I think that this is my opinion. I think that they're actually going to fix this. I don't think it's, like you said, it's time to step in right now, but I think we're going to have a serious bounce in the Shanghai and possibly in the Hang Seng. The Hang Seng really hasn't pulled back that much. I mean, if you look at it, and it hasn't really gone anywhere either on the upside. But I think there's going to be some crazy opportunities on the north side.
Day in and out. I mean, yesterday was like the day trader's dream. Yesterday was day trader's dream.
I mean, when you have government intervention, just look at the yen. Look at the U.S. Government intervention on the treasuries. I mean, you really don't want to stand in the way of something like that. I mean, we've talked about that. You've got some free trades in the past year or two, or even longer. If you just kind of looked at, okay, what is really the MO of a central bank or the government, and don't fight that. I think we're going to have the same thing. Not a lot of people are talking about this, but I think we're going to have the same thing in the the Shenzhen, the Shanghai, the Nikkei took just a browbeating last night.
Yes, absolutely.
That's a different story.
Right, you have to take that into account, because when you have a government with huge piles of money to intervene, I mean, and we're talking huge piles. I mean, this is not your average Federal Reserve strategy. I don't know what they're going to do. Yeah, but they're going to do something, and we have to. It's going to be a trader's paradise. I'm totally into the market right now. I think the market is behaving in kind of paradise. I mean, this is heaven for day trading. Overnight and swing trading is going to be a challenge in the coming weeks.
Juan, I tell you what, I hear the music. Can you hang around for just a little bit here? We're going to come right back, and I'd like to discuss the U.S. markets for a tad. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Juan, are you still with us?
Here.
Okay, great. Let's kind of hit up some of the things people want to find out about other than the Asian markets here before the markets open. Let's go right into gold. I'm going to go to the August contract. If you can view the TFNN network, you'll see the charts a little bit delayed, probably maybe 5 or 10 seconds. What you're seeing, here's the long term. I mean, here's the weekly. Here's the daily. Excuse me. It's just kind of crazy how gold showed its hand so early, being just non-eventful during all these, multiple crises out there. Where do you think this thing's headed, and have we reached a bottom around 1140, 1150?
No, I don't think we have. My target for gold, we talked about this probably, one of the shows in the past is 1,000.
Okay.
That's my target.
Yeah.
So I'll be shorting rallies in gold. And if there's a time frame for this thing. Some instruments have a specific time frame that I looked every, for instance, gold is quarter. If you look at the quarterly chart of gold, it's going to be very interesting. Every 3 months I look at this chart, and we're just, we need a washout, a final washout, probably to 1,980. But I don't think the rally in gold is going to start anytime soon. This can change next week. I don't know, but the technicals and the quantitative analysis that we do is telling me that we might go down a bit more, 1,980.
I'm with you, and I know you're under the same mantra that I'm looking at these things with, and hopefully some of the users are looking at them. I'm going to pull up our scanner in the den here, and I'm going to go to our futures section. really quick, and I'm going to look at gold here. There it is. All right. So as you can see, this is kind of the way, the easy, simple, in my opinion, way we look at gold is the way you look at it, Juan. We're just waiting for some confirmations. If someone's going to get back in the water on the long side, you're never going to catch the bottom. If you try to catch the bottom or the top, you know how that works. That's playing with fire. You want confirmations. You want leverage one way or the other. And that leverage, the way Juan and I really look at things is to kind of get past some of the balanced areas on the upside to really start having some convictions. And more importantly, Juan, is to, where do you place your stops if you're going to take a stance? And right now, you've got a new box attempting to appear, a new profile, new balanced area, new demand area, if you will, starting to appear on the 240. That's really all you've got to, kind of lean on right now. And, there's just not a lot of signs right now to step in and start switching to a long attitude on gold. There's all the reasons in the world to actually stay short, like you're saying. So, and here's the landscape view on that gold contract. We're just, well below profiles on the three main time frames that we look at all the time. So going back to the chart, this is our new 240 demand area that's appeared down here, and those inflection points, this is our 240 minute, those inflection points are something that we're just kind of paying attention to. I'd like to see this thing at least get back above, if anybody's even going to nibble on this, I'm going to go back to our daily. I'd like to see a new profile appear here just to kind of get some, backstop, if you will, to start leveraging longs or stops. But right now, there's just nothing there. As you were saying, Juan, it's just probably not the time to step in.
Yeah, and take a look. Every time somebody has been stepping in and buying, it's been negated. People just try to bring this thing up, and then boom, a ton of sellers come. So it's been negating rallies day in and out.
And what more could you ask to go long gold than to have kind of global somewhat catastrophe going on? It's just nobody cares. Nobody
cares about gold now. The flight to quality is the U.S. bond. That's it.
Yeah, but something you said that's really important that I think everybody should take note of is, gold usually does these crazy moves almost in the wrong direction before it goes in the right direction, and we're going to have to see probably a massive washout before, and just kind of get everybody out, and then it's going to be time to probably start stepping in. And it may be, right now, I don't even have any numbers. I was thinking 1150. We've kind of rested down here. But if you look at it, this is kind of triple bottom, however you want to look at it. It's those things are usually meant to be pierced. So
I'll wait for new boxes to appear on that chart before, making any move.
Juan, thanks for coming on today. I'm going to take it from here and go over some of the usual suspects and get people ready for the opening. But thanks again, my friend.
Absolutely, anytime.
Okay.
Thanks for having me.
Yep.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit.
In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We covered gold right there, a little bit of fundamental thrown in, but the technicals just don't look good, and there's not a lot of reasons, in my opinion, to think otherwise right now. Just looking sick, and like we talked about, gold does some crazy moves in the wrong direction, seemingly, before it makes the right directional move, and be ready for that massive flush. But also be ready to pick up some deals at some point. Got to have some new profiles appear. This is September copper. This is the situation on the daily. This is quite amazing to have this thing pull back like this. Here's the weekly situation. Nothing down here, kind of breaking through these recent lows on September copper. Here's the daily. Nothing down here to hang on. We'd love to see a new profile. Again, what do you do with this? Is it a short? Is it a long? Here's the 240s on copper. I don't really go down any farther to any lower time frames, but short term, this is the situation. 2.4028 unfair lows on the bottom of our short term box, and the top targets right now will be 2.4979. So right now, again, not probably the safest play to step in yet and try to think copper's on sale. And what we want to do here is just probably just sit tight on copper. That's my take on it. I think we've got a caller from Raleigh, North Carolina. Paul, are you there with us, Paul?
Hi, good morning, John.
Great.
Is it possible you could talk about the TAS programming and predicting in real-time changes in the markets? Like, for example, U.S. Aussie yesterday, you talked about it, how it would continue to go down, and it kind of took an opposite ramp. How would your TAS, in terms of these situations, and also when the indexes in real time, in terms of oscillators or volumes, predict changes or turnarounds in markets?
Yeah. What the first thing you said, we had predicted something, but I can't remember what market were you talking?
The Aussie dollar yesterday.
Okay, the Aussie dollar. Let me pull that up. Let's just kind of pull up something for example here. Yeah, I mean, this is again something we've been talking about from the short side for a while. It kind of astounded me a couple of months ago when it broke back above 79, but again, that was kind of the sit tight. I'm not a big fan of going long the Aussie dollar. I'm in Asia, and I seemingly have a little bit better pulse on this than maybe people here. I know there's news stories out there, and everybody can be a in the know type of person when it comes to anything now. But that there's less than 25 million people in this country, and in Australia. That's around the ballpark of their total population. Their whole country relies on mining. They're great at digging a hole and seeing what happens, but they've got some relationships out there when other economies slow down or where things change, they really can take it on the chin. Plus fundamentally they've had an MO from their central bank or whatever you want to call it that they want to devalue this thing. So again, it's like the same thing we talked about earlier. Don't stand in the way of these MOs of these central banks or governments. Technically speaking, we talked about the initial targets around 76 on this thing, and we also talked about not trying to buy that and waiting for it to cave in. Here's 76, 31, 32. Now, when we started breaking down below there, especially getting some momentum and not having any reasons whatsoever to take the short trade off again. What do you do with it? The algorithm is basically, I'm not going to tell you the entire algorithm, but basically it predicts when this is our 240 chart right now I'm showing. It tries to predict when a new balanced area should be outputted. And right now on a long-term weekly and on a long-term daily, it's saying that there's no new demand areas that are even attempting to appear. Therefore, we're kind of in a hole situation where we could continue to slide. And if you're thinking about trying to buy dips on the Aussie dollar right now, they're just not there on the long term or intermediate term. On the 240, if you'll look at this, I'm showing it on the in the den right now. We kind of look at the long term MO, usually the weekly and daily, and then we use the 240s to try to regulate the trade down. So it's kind of like a trailing stop system that expands and contracts based on volatility, which is nice. It automatically outputs. And these 240s right now, I think, stops can be oriented based on that same theory we just talked about, above 74.62 right now, and just continue to let this breathe and continue to watch the 240 unfair highs to regulate the trade down. Is that kind of what the explanation you wanted to hear? Or?
Well, yes and no, but in real time, if I was going on the basis of shorting the Aussie dollar, at the same time, there's some other traders that are doing exactly the opposite thing, and I'm trying to understand their technical analysis is getting exactly the opposite of what yours is on some occasions, and I'm trying to understand, are there some volume or oscillators that should lead to some type of common denominator, to whereas I'm not going to get hammered on continued stop losses.
You know what, I hear what you're saying, and there's some great things out there. I mean, Larry Pesavento's next has got some great information on Fibonacci's, and Basil obviously just love to watch him. And I haven't watched or talked to them about the Aussie dollar. I'm just using, I'm a big fan of, maybe not trading as much in my latter years here and letting, more confirmations be in place. And what I'm seeing right now is I'm seeing that the short trade is still on. Let's let the profiles and the price action relative to these profiles tell us when it's time to start thinking about sitting on the sidelines on the short side. And I know, like, I was in Australia like two years ago, I believe. Maybe it was when the Aussie dollar was 108 or 106 or something like that. And I would have never guessed that this particular currency would have caved in like this. But the thing I always keep in mind is things on their lows go lower, things on their highs go higher. This thing could end up at 50. You never know. And is it time to step in on the short side? This is what I'm doing. I'm looking at the 240 profiles to regulate the long-term trend down. And I'm shorting. I'm a big fan of, just like we had there, just like we had here, just like we had there. I'm looking at my charts now. There are resistance opportunities to try to take advantage of when it comes to trading the Aussie dollar still on the short side. So I'm not a big fan of going long this. I don't think it's gone down too much that it's on sale. And, in the short term, if we get above 74.63, I'm going to probably, based on my appetite for risk, stop myself out of the short trade. And, that's just kind of the way I'm looking at it.
Okay, John, on a second question, sort of a different tangent, so to speak, we spoke briefly about possibly, or I inquired, I don't know if I articulated the question properly, but is it possible to set up an algorithm in terms of the past history, in terms of the Fed or the quote powers that be, in terms of how they may control the markets? For example, if I can make a comparison, if you ever gone to like auctions in North Carolina, commodities, livestock, etc., the auctioneer at some point you can detect, hit as a BS indicator, how he's talking with the crowd, how they're reacting is, in your mind, you have an algorithm, you can tell where the market's going to lead. Likewise, from your experience, how would you set up an algorithm, quote, BS detector of what's going on in the market? There's some programs like the Merlin, et cetera. It reacts off of social events, are different, quote, semantics that are going on. Is it possible to set up some type of accuracy in terms of algorithms of different things that are going on in the markets in terms of predicting, different levels of ups and downs?
Yeah, that's a great question. And what I've got right now on the screen, if you can see it, not the one behind me, that's a scanner tape going on, but I've got an automated system right now up on gold, right? And to hopefully answer your question, what we've done, and let me get right into this a little bit more. Let me pull up this. If you can see this, it's probably on delay. What I want to do here is click on a couple of things here. What this is an automated system based around profiles, looking back in history, trade entries based around, those inflection points of the profile, stops, trade reversals, how wide boxes are, how thin they are, if they're probability-wise the best case scenario to trade inside the box or outside the box, wait patiently. There's a number of filters that we've put into this based on some of them are, take confirmations on different time frames to enter the trade. There's different exit strategies built in here. I'm just showing you something in eSignal in particular that runs this particular algorithm. So going back to the chart, and again, there's probably a little bit of a delay here. I'm showing you the green line is a profitable trade. The red line is a not profitable trade. All right. Now, what this gold system does is it primarily only enacts trades around daily profiles, daily unfair highs or daily unfair lows. And why did it go long here? Why did it exit here? Why did it go long here? Why did it take a stop here? And currently, it's in a short trade. There's a little thing there that says BUL, below unfair low. That means that we're below this unfair low. We've kind of caved in. We've rallied back. We've got our stops in force. They haven't been hit, and we've been short gold for a little while. All right. Now, to answer your question again is, have we back tested this information? Do we believe in it? Do we run our own money on some of these automated systems? The answer is yes. And what we found out is kind of trying to take as many things into consideration as we can. For instance, why did we take this long here and take a stop out? That's because a lot of other factors lined up at this stage. And, we had a pretty good profitable trade on this trade from 1170 up into 1185, but we decided that there wasn't any real serious reasons to take the long off, and therefore we took a stop out on it. But on this enactment of this trade, I'll just tell you how this, to some degree, how this algorithm works. It says, you know what? The daily inflection points are the most important over time that we've decided to look at. The weeklies, we don't trade enough based on weekly inflection points, so we, to get a bigger data sample set. So we trade on the daily inflection points, and we say, for instance, okay, are things confirming that it's okay to go long here or go short here around this inflection point? One of the key factors, simply put, is are we trading above profiles on our 240 and 60 at the same time we come down to this inflection point and bounce? That's the simplicity of it. The other things in place are, we're looking at our navigator. Are we above zero, below zero? Are we having divergences in navigator to cause this to try to take a long trade or short trade? And what we've done, and a lot of people in the institutional world, it's really a good question, Paul, that you asked, because the first thing they ask us is, okay, how do I know your information works? How do I base, running my customers' money on your information? And they always go, have you got any back-tested results? And the answer is, well, we can take our information, put it into a TradeStation or eSignal, whatever, back-test it, tweak it, optimize it, and make it look like a 45 P&L curve, and tell the guy, yeah, great, it works perfectly, and you should use it. And that's based on an algorithm that we throw together that they would actually have to, use pinpointed every day exactly how we're using it, and that would have quite a few other factors in. It's amazing how these institutional guys, if I showed them a great report, they go, oh, great, I'd use your indicators. But what we've done, I think, is make the algorithm really simple to do back testing, just like I said, based on profiles. And, therefore, we feel relatively confident with it. And we try to turn the wrench the same way. I mean, if you watch the show, I may be kind of boring at times, and I just talk about, really the same simple things over and over again. But what I've learned, Paul, is to try to not complicate it, not throw too many things in place, and also try to, not trade as often. I'm a big fan of waiting patiently until the market comes to us or you, using this information and trying to, you trade a lot, you trade 30, 40, 50 times a day. The broker ends up making a lot of money, and maybe a lot of the trades that you took aren't necessarily the highest probability places to trade. I'm sorry to keep rambling about this, but I'm trying to answer your question.
No, it makes a lot of sense. I guess still I don't know if I'm articulating my question in terms of, you have technical analysis and you have inflection points and profiles, but I'm saying, is it possible to maybe run in parallel to that an algorithm that's social in nature in terms of combining, the feel of the markets and maybe where the mind of the Fed is?
That's a great question. I understand it now. Can you hang around after the break? And okay, sure. Great. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Paul, are you still with us?
Yes, John. I know the time's getting short, so I just might want to start with a simple question. Are you familiar with the Merlin project?
Can you give me a hint?
It's an algorithm that uses somewhat what Larry Pesavento uses in terms of mathematics, different astronomy, in terms of predicting the future. It predicted a lot of things like the 9/11, different other scenarios in history with an 80% accuracy rating, and not necessarily technical in terms of the market itself, but more or less, I'd say, social and astronomy and other mathematical algorithms that have been extremely successful.
No, I'm not. But I can see there's some merit in that, and I respect everything Larry talks about. He's got a vast amount of knowledge in that man. I tell you what, I'd like to answer your question if I can on what you originally asked about the kind of bleeding in the fundamentals into making some decisions. Is that basically kind of what you were asking with the
Yeah, but I would say a little simpler, but more complex in terms of what is the past history. Like, for example, there's supposedly Fed minutes coming out today. Is it possible if they, with your vast knowledge, would you say that the Fed's not going to try to crash the markets further, and to what extent? I mean, how would you put a gauge on that? Would they try to support the markets verbally and also, physically?
Yeah, I'll tell you what, I mean, my whole concept of the Fed's role has changed probably in the last, years. It's been extremely accommodating to stock market valuation. And I don't think that they didn't, in the past, that wasn't seemingly their MO. So if you put a gun to my head, I'd say the chances are relatively high that they're going to try to do what's right to save the U.S. stock market. I mean, put simply, that's kind of my feelings on it. We got about a minute and a half before we got to end the show, so I'm gonna try to answer your question, your original question, a little bit, as much as I can here in 2 minutes. We always talk about it, when we have big fundamental announcements that come out, it might not be the best time in the world to be in the market. I mean, you're kind of rolling the dice, especially if you've got stops. If you're not a long-term investor, you're not willing to kind of suffer through some waves. What we do, and what my friend who was on earlier today, Juan Villegas, he runs proprietary trading in Latin America. We've got traders in Asia. What we like for them to be really are more operators and not traders. And when I say that, we try to, the technicals, we kind of stand back on the hill, give the talks. We're not in the battle, Juan and I, on a day-to-day basis on a large scale, and that allows us to disseminate the information downstream as unmitigated and objectively as possible. So these traders use the technicals, and that allows for some fundamental to bleed into what they're doing by either saying, you know what, we're a little bit more biased towards the short side on these instruments. We use I wish we had more time today. We use the profile scanner. I'm pulling up, I'm saying, okay, look, let's try to find the instruments that are trading above profiles but sitting at support on our dailies, and there's our list right now. There's our ripe opportunity for massive pullback and sitting at support for buy opportunities. But is the fundamental outlook out there time really yet to buy stocks? That's the kind of mix that we're talking about. And these traders, so-called traders, are more like operators, and being able to get through the minefield that way. Paul, it's a great question today. Thanks for coming on, and we're going to pick it back up again tomorrow, guys.
Thank you, John.
Okay.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.